Hey, how's it going? I was asked to maybe go through some of the screening things that I do before I place a trade. So I thought I'd record a screencast of some of the things that I'm going to go through before I kind of open up a particular trade. I tend to focus on selling option premium, and I tend to try to be non-directional. So I like kind of a delta neutral play. Um, so I'll just kind of talk through some of the things that I start with. Um, I have pulled up here kind of the screener that I use. This is where when I'm looking for a new delta neutral play. This is kind of the baseline that I start with. I'm going to start looking at the stock price. I pretty much found that much below $15, um, don't tend to get a lot of good hits below that. So I kind of set a minimum threshold of about $15. Depending on whether or not I want to go with a condor or a strangle, or even a straddle. I might limit the top side based on my portfolio size, the capital that I have in there. But for this, I'm going to kind of look through for a defined risk trade. So I'm actually going to look to put on a condor here. So when you're doing defined risk, the underlying cost really doesn't matter as much because the risk is going to be the width of your strikes that you choose in there. So price is one of my first screener. Volatility is a very important one. Um, I used to use historical volatility a lot, but I kind of found the more recent events over the past several months have kind of skewed where stocks sit when it comes to historical volatility. So you'll see that I'll kind of reference historical volatility once I get further down in my screener. But basically, I'm going to look at stocks with a volatility of at least 30%. I'm probably going to end up focusing in on ones that are in the 55 to 85% range. Um, I'm a little uncomfortable much higher than that. I've done some, and I just feel they can kind of whipsaw around a lot more. Um, and then much below 55, it gets a little bit harder to get enough premium off of there for me. Sometimes they will. It kind of depends on the beta and depends on the underlying price. So I don't discount them, but the first places I'm going to look are usually in the 65 to 85, 55 to 85 range, somewhere in there. Beta, this is one of the parameters that goes into the pricing of the option contracts. So you can go lower than zero point 0.8, but I typically don't try to go lower unless I have a problem with the set that comes back. But most of the time, the sample set to pick from is usually more than enough for me at a zero point 0.8 minimum threshold. Sometimes I even turn it up to narrow the list down more. But all these parameters I kind of have in the table below, so I'll kind of do a secondary screening of them. Um, Average volume. Basically, I really want a lot of volume in the options. So one of the best ways to screen that out is to look at the volume that's traded in the underlying. So I'll tweak this a little bit here and there, but for the most part, I'm looking for at least 1 million shares traded every day for the past month. That usually is a good indication that there's a lot of liquidity there. And I'll do a check in the options chain to make sure the options chain also appears liquid. I haven't found a better screener than this, at least to now, but it's one of the things that are there. The next two indicators kind of go together. They're the RSI indicators. And really what I want to try to do is find an underlying that is kind of in the middle of its trading channel because I'm going to go kind of delta neutral. So I kind of want to look for things that are in the middle of the RSI chart. And so these are some of the parameters that I threw in there. Basically, I'm looking for something above a 45 RSI, but also below a 55 to try to catch that underlying more in the middle of its channel. I also don't like when I'm playing for the long term here, or long term means for the full 45-day cycle. Um, I don't like to have earnings popping up in there because those binary events can cause a little bit of havoc. And so I have different screeners of when I actually want to play earnings. I specifically look for that. But in this particular case, I'm not interested to play any earnings here. I'm just kind of looking for a hey diddle diddle right down the middle kind of underlying. So what I'll do is I'll kind of run a scan here, see what kind of results come back. The first thing I'm going to do is probably sort it by volatility. I'm going to try to then jump my eyes down into the 55 to 85% volatility range. Sometimes this screener is kind of slow. If I usually just tweak a parameter and kind of run it again, it returns faster. I'm not sure why. I've been noticing that today. Well, I guess we'll just stick with 29. Yeah, so let's already sorted by volatility. So what I'm just going to kind of do is kind of scroll down here in these mid ranges. I'm going to look for something with kind of a higher underlying price, kind of a name that I know, have heard of, volume. Maybe I'll take Boeing here. Let's take a look at Boeing. So once I pick an underlying here, there's two main charts that I kind of like to look at. The predominant one when I'm entering a trade is usually about a 4-hour chart. This covers about 180 days here. That gives me a pretty good idea of where things have been with this particular underlying. And what I can see right here is, yeah, this has been trading pretty flat in here. So this is one that I probably would consider to move along to look for the option chain to see what it's showing there. The other chart that I have down here is a 1-minute chart. Basically, it's just a daily chart. I don't really use this very often to enter trades. Usually, I do this when we're getting close to exit. I kind of look at what it's doing intraday on the 1-minute candles to try to see, like, are we diving lower that maybe I want to hold out for 20 minutes, an hour, see how it shakes out. Maybe I get a better price. But as far as entering, I kind of look and yeah, Boeing's probably stabilized where it is for today. So it's not like my entry price is going to change much. So what I'm going to go ahead and do is look at the option chain here on Boeing. And I'm going to target about 45 to 35 days. So this particular week is the week when I'm starting to open up my trades for the month of October. And so I'm going to come out here and probably the first strikes I'm just going to kind of throw up to see what they look like are probably going to be around a 20 delta. Sometimes those aren't going to collect enough premium, but let's see how this one pans out. So I'm going to grab the put side and I'm going to start with just a $5 wide strike here. I'm going to come over to the call side and see where the 20 delta, and basically I'm just looking at this delta Greek here to see which the closest to the 20 that I can kind of come up with. So over here I grabbed the 150 strike, which is about a 23 delta, and then the 145, I'll buy that long. That's about an 18 delta, so, let's grab this one here, the 210 strike, and the 215 strike. So right here, this is something that's going to meet my criteria for what I would trade. So generally my rule would be I need to collect at least 30% in premium for the risk that I'm putting on in the trade. So in this trade, I'm basically putting up $500 risk because it's a $5 wide condor. And I'd be collecting $1.80 in premium. So my target for 500, 30% would be around $1.50. So we're over my threshold. One of the other things I'll kind of do from there, um, look at the risk profile. And I tend to want to hold these underlyings till about they reach 50% of their profit, or we get to about 21 days to expiration. Those are kind of the two thresholds that I'm going to kind of be targeting. So I would want this to collect around $90 or so if I chose to enter this trade. When I would step out. And so one of the things that I would do is I would also kind of look to see, well, what's the expected range when we're about 21 days to go, which should be around the end of September, probably the 25th. And I look at my expected range. I kind of look to see where these strikes are. Um, how does that straddle with the expected range of the movement there. Um, I might also occasionally take the slices here. I might set them to where's the break-even points. Um, then I might also send those over to a chart just so I can kind of see where does this look like as far as historical values, and I'll kind of look to see where were their supports. So um, what I want to kind of look at is if this stock tends to go, north or south, is there historical resistance levels, which might make me feel more comfortable about my trade. I can see that there was a resistance level here around 150-ish dollars, it looks like. Um, so that's pretty good because my lower break-even strike would be at 148. So it's kind of within that support range. So if this stock started going south, I would expect it to run into some resistance around this $153 mark. So that makes me feel pretty comfortable that my lower range was below that. If I wanted to kind of show warning signs, the next level of support down below um, is probably around here, which is 135, but this is actually a pretty decent channel for me. I'm not, I kind of like this layout, this setup here. So let me come back to my trade. And what I think I might do here, because this is pretty decent, and most of my trades currently that I'm targeting, I'm trying to hit at about $720 in the trade size. So I'm going to probably trade this one at 2 contracts. What that will do is that takes my max profit up to 374. My risk here is 1,000. And you'll see when I go to enter this trade, I'll look at the bid-ask spread. Sorry, I forgot to show that. Let me go back to the option chain before I actually put this order in. When I'm looking at the option chain for liquidity, I'm looking at how close are these bid and asks. So if they're within, pennies, that's wonderful. That means super liquid. Um, if they're within nickels, dimes, they're still pretty liquid. Where I'm going to start to get nervous is if I pull an underlying up and the option chain is like quarters and 50 cents and dollars difference. If I see that width in the bid-ask spread, yeah, I won't even touch it. It doesn't really matter where the premiums are. That basically means it's not a very liquid underlying, and I'm not going to enter that one. Um, this one has decent liquidity. Also, Boeing has been trading out the wazoo, so I'm actually not worried about liquidity at all on this particular trade. So when I say I'm targeting around $700, $720, what I actually mean is a buying power reduction. So I'm going to be collecting $1.87 times 2 in credit to offset the $1,000 of margin. Um, so actually I might set this price to 185 to try to get filled. But when I go to confirm this, what you'll see is this is about a $635 trade size for me. So that is underneath my about $720 target here. So I'm going to go ahead and issue this and see if I get filled. Yep, and I was filled at $1.85. So yep, I've opened up this Condor now, and what I do is kind of go back to my scan tool to see what else I might pull up. Um, and those are pretty much how I go look for my delta neutral trades. Um, I'm going to pull up real quick just to chat a little bit about some of the other screener. So sometimes I'm not looking for delta neutral. I actually want to go one particular way with the delta, delta positive, delta negative, if I'm actually putting in adjustments. And essentially, it's a very similar base screening, looking for a minimum price, looking for that 30% volatility, looking for that zero point 0.8 beta. But really what it changes is that RSI that I had before, now I'm looking for an RSI that's more on the lower end of its range, that's maybe looking to take off, looking to go up. I'm also looking for this thing to be above its moving average, its 200 period moving average. So it's above its moving average, but it's also on the lower end of its RSI window. Um, and hopefully what I think you will see in some of these, and I'm still tweaking some of this stuff, but you'll kind of see more of a bullish trend here, or or an overall kind of uptrend. You won't see that level off that you saw when we were looking at the other scan results. Um, so these are potentially ones that you can see this RSI is kind of on the lower end, but it's still above this moving average. So if I wanted to play something directional, this might be a good thing to get positive delta on. And what that means is I would probably play this directional. I wouldn't maybe put a condor or straddle around it. This is where I'm going to play a vertical in one direction and put my strikes much closer to at the money. Maybe I'll buy a 35 delta or something like that, because I'm more inclined to think that this thing's going to go north. Um, and then I have a similar one for when I need to pick up negative delta, which is roughly a similar criteria. You'll see the same base scan results at the top with the stock price, the volatility, the beta. Only here I'm looking for moving average below, price below the moving average. And I've kind of been tweaking with some of the RSI, although I haven't been having as much luck with some of the RSI, so it's actually not in this current screener here. But the idea is that this will try to turn up potential stocks that are going to start heading south. And you can kind of see this is still very flat, but it's lower than its moving average. And like I said, not ideal yet. Um, but in any one of these, I might be placing a vertical that's more on the bearish end of the screener. So anyway, these are the criteria that I like to use for finding my opening my new positions that are delta neutral. Thanks.